Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Prashant. With me, my colleague Nigel and Rima will be with us in just a short while. Nigel, morning.
Well, morning, Prashant. Plenty of action overnight in terms of equity market, in terms of Trump's tariff talk as well. And from a domestic standpoint, last week I was just talking about maybe we get a holiday on election day and then we make that up on budget day. Appears that could possibly play out because yesterday the NSE went ahead, BSE they officially announced. Yeah. So you don't have any excuse now. You have to go there and vote. Cast your vote. Don't crib later.
And it's important. And I think it's happening after, I'm not sure, last month, I don't remember holiday declared.
For BMC election.
But I think BMC election, the last one was many years ago.
Yeah.
So, okay, well, let's just take it from the top, right? Because news flow, it's not local at all. It's all global in that sense. At least, what is significant out there. So U.S. equities, not very much price action-wise. S&P about 0.16 higher. Nasdaq about 0.25% in the green. Banks and credit card companies fell, of course, after President Trump said that interest rates should be capped for 1 year at 10%. So Capital One, Amex, JP Morgan, Visa, across the board, if you can put those up, they were down sort of sharply. There you go, on your screen. Now, President Trump has warned of severe consequences if the Supreme Court strikes down his tariff plan. And remember, this was what was supposed to happen on Friday. It did not happen. And most likely this will be heard. No guarantees. The ruling will be there tomorrow. Tomorrow evening, essentially, is when this is now expected to take place. Now, of course, it's a long post, social media post, but it was basically saying that over a 9-month period, the U.S. has collected hundreds of billions of dollars, and all of that will have to be refunded. It's going to be a mess, et cetera, et cetera, et cetera. So maybe a little bit of public pressure or pressure publicly on what the court essentially is thinking of doing. But as I said, this decision is tomorrow evening. Now, the only thing is day after is a holiday. So 15th is a holiday because of the BMC elections here. So in that sense, tomorrow becomes critical, important. It's almost like that Friday when we would have had the decision later in the evening and been able to only react to it on Monday morning. So it's something similar. So Wednesday is the decision in the court. Thursday is a holiday, and we come back and react to it, and of course on Friday. Okay, now U.S. this morning, President Trump, of course, is saying that he's going to impose 25% tariff on countries doing business with Iran. He's been sort of, ramping up the pressure, explicit open threats that if the Iranian regime suppresses protests, and there are protests across cities in Iran, if the regime suppresses protests violently, it's going to basically force his hand. And this, of course, I think is from the economic side, 25% tariff on countries or any country doing business with Iran. Now, India's trade numbers with Iran are pretty small, between $2 and $3 billion or so. And I think from a market-sensitive point of view, it's basically basmati rice exports, so names like KRBL, LT Foods, etc. Not very much. Some essential good exports, some import of chemicals, that kind of stuff. So it's actually pretty small. What happens to India's foothold in the Chabar port in Iran, which essentially bypasses Pakistan and gives us a sort of, a direct route to Iran, all the way into Russia, Europe, etc. I think those are questions. Remember, this is an important, critical, strategic venture for India, and this got a sanctions waiver from the US back last year. So we don't have clarity on whether this will sort of come under the ambit of these tariffs. I just go back to yesterday's session. Comments from Sergio Gore, the US ambassador to India, sparked the rebound, and I was talking about this for the last couple of days. How this is an additional factor, not a sufficient condition, but an additional factor, which I think markets will start to pay attention to, because you've got someone from President Trump's inner circle now stationed in Delhi. So in that sense, much easier to communicate with the president himself through him. Gore, of course, invited India to join Pax Silica as a full member next month. There was lots of hand-wringing and disappointment when India was not invited when this was formed late last year. This is basically to secure supply chains for semiconductors, AI, critical minerals, etc. So, Gore saying that his first initiative actually in India, essentially saying that India is going to be invited next month. This is good news. And of course, also saying that high-level negotiations are set to resume today. We understand from sources, though, that there are no formal talks scheduled. So this could be on the informal side. We'll track as this goes. Lots of numbers came through. Large cap IT kicking off earnings. HCL Tech numbers are a beat. TCS is largely in line. You'll hear from both managements as we go along. And yesterday, we were at the cusp. The Nifty was at the cusp of breaking a very long-term moving average, which is the 20-weekly moving average. We managed, with the rebound held by those comments from Gore, we closed above it, above the 20-weekly moving average, which now stands at 25,648. And that remains, in a way, an important level. Bank Nifty, also, it broke, or was at the cusp of breaking the 20-day, the prior session. It closed at the 20-day, as of yesterday's close, 59,415. And look at the close, 59,450 is where we left off as far as the Nifty Bank goes. So that's the picture and the overall setup. Nigel has walked across with what's happening on the F&O side of things and the positioning. Nigel, take it away.
Well, the bulls were looking for some kind of positive data point, and Sergio Gore really provided that in yesterday's trading session. The bounce, though, came from oversold levels, but could possibly be just a near-term relief. Though the bulls, they'll be counting on this 25,500 level holding out. The problem is the FI selling continues. Yesterday as well, they sold nearly around, 3,600 crores or thereabouts. And that sell number needs to cool off a little bit. What did they do in the index futures? Well, they went ahead and they added some short positions. So in yesterday's trade, they added close to around 8,700 short contracts. No signs of short covering as of yet. Well, that could be a blessing in disguise because the short positioning continues at around 92%. And as we have mentioned in the past, well, the short positioning at its highest levels all the way since October. So the FIs, they're building on shorts, but the clients, they're piling on the longs. So both of them working on the opposite ends of the spectrum. And actually, this sort of combination in the past has signaled that we do see a bit of a bounce from these levels. So let's see whether or not it does play about. As I said, they didn't cover shorts on index futures, but they covered the calls that were written earlier. And they wrote some puts as well in trade yesterday. To give you a couple of data points, the 25,700 call, well, close to around 20 lakh shares were shed yesterday. So those calls that were written earlier, they quickly packed their bags and got out of the market. While the 25,550 put, well, that saw a good amount of open interest build up. Keep in mind that this strike will expire today because today is the weekly expiry, being a Tuesday. So the bulls will want this 25,550, 25,500 level to hold out. And the PCR has corrected itself. We had pointed out yesterday two factors that could lead to a bit of a short covering bounce. One was the FIs being net short. The other factor was the PCR was at the lower end of the range at around 0.62. Now that's corrected itself because of the kind of action we've seen in the options data. And now it's at around 0.9. The levels to track on the Nifty, yesterday's low becomes important, 25,500, 25,473 to be precise in terms of a near-term support level, while resistance comes in at around 26,000 mark. You look at the options data, you have the 20, the 50 DMA, all of them come in the vicinity of around this 26,000 odd mark. The sector to track today is going to be the Nifty IT index because you have HCL Tech numbers were actually quite good, and you have TCS, well, yesterday towards the end of trade did perk up. But those numbers weren't too bad. So tech will continue to remain in focus. So let's see whether or not this can hold one end up. But the Nifty Bank, that was the first one that got off the blocks yesterday in terms of a recovery. And that managed to conquer the 20 DMA on a closing basis. So that one will have to continue to hold its own. Three factors to track from here on. That'll be the India-US trade talks. That's going to be important. Earnings as well, that continues to flow in. And there'll be some optimism getting into budget 2026. Net-net, we're in a bit of a range. The bulls will fancy their chances that they can defend this 25,500 odd mark. Prashant.
Well, thanks for that, Nigel.